everyone. Um, so I am back, kind of, sort of. Um, Not that I ever went anywhere, but I just, with the holidays, and then I just got a little busy. And then I was also sick. So there was just a lot of stuff going on all at one time, but I'm here. Just been a lot of stuff that has happened since we last had fundamentals on the call. But what I really want to do tonight is just kind of go through some of the stuff that's on the calendar for um, this week, and then use next Monday as a day. Um, I didn't say Friday because um, I have class on Friday, so I'll be back and forth between two Zoom calls because my class starts at 6:45. So um, it will be very brief on Friday. So Monday will be the day that we do more of our in-depth stuff. Wednesday will be a day for questions, follow up, finishing up the week. So um, just to kind of recap some of the stuff that has happened on the Forex Factory calendar this week to tie it all into what's going to happen at the end of the week. We've had Fed speeches Monday, and then yesterday we had consumer confidence numbers that came out. So the biggest thing right now, now that midterm elections are over, is now just trying to get stuff done to tie up loose ends that hadn't been completed during the first half of this administration's term, going into now the second half with, different members in House and Senate, and just trying to move forward and still push the current agenda. Preliminary job numbers were off. The preliminary GDP was actually good considering. JOLTS jobs were good. Pending home sales, better than expected. And I did not hear Jerome Powell's speech today. However, as we go through and start thinking about what the Fed has said that they want to do, and as we look at some of the things that are happening within the economy, we know that the banking landscape is changing. So with interest rates going up, that caused mortgage rates to go up. They're not quite as high right now as they used to be, but they're still up there, comparatively speaking. And hopefully these things will help to slow down some of the big driving forces in the market. Going forward and finishing out the end of the year, still expect to see interest rates stay high. They're not going to start pulling back and tapering interest rates anytime soon. So just because they say, oh, inflation has peaked, is slowing down, it's dropped. If you hear anything like that, don't think that that automatically means that the Fed is going to start dropping interest rates, because they're not. The whole point of all of this is to stress the system and to put pressure on the system, to then put pressure on the consumer to slow down and stop with all the excessive spending. So that kind of rolls back into some of a Fed speech earlier in the week, and then also just some of the consumer confidence items that have happened. So elections and policy often help to shape consumer confidence and consumer sentiment during this time of the year, especially in a midterm and presidential election year. So the policies that came out that were kind of put forth for student loans, I know we've talked about it already, but it's still worth mentioning the fact is several things with it. First of all, it's printing money, because this money that is going to be used to pay off these loans is going to come from somewhere. It's got to come from somewhere. It's got to be paid back. You know that anytime stimulus happens, it comes back on the consumer, on the everyday person, on the taxpayer, because it always comes back in the form of higher interest rates, taxes, inflation, because you're adding money to the system. Because people don't realize, like, think about what you hear people say when people are like, yeah, that money that people could be spending on student loans every month, they're going to be using it for something else. So that means that the money that the government is printing to pay off or to help people pay off these loans is now going to be shifted somewhere else. So that money that people are quote unquote saving, technically now they're spending it elsewhere. So it is a form of stimulating the economy, which right now the economy needs to be slowed down. We don't need to be stimulating anything. We need to stop all the excessive spending. So the whole conversation with student loans on that end kind of ties into what the Fed is doing. Now on the consumer confidence and sentiment end a little bit more, you now have people that are suing, talking about how a lot of what the Fed, or sorry, a lot of what the Department of Education and what the Biden administration wants to do with student loans isn't fair. If you notice, a lot of the people that have actually found lawyers to actually bring these cases forward are people who don't qualify and barely qualify or barely missed qualifying because they either paid off their student loans, didn't have the right type of student loan, privatized their student loans when it had been federal. So anyway, it's, in my mind, it's like a little bit of jealousy because it's like, well, I now don't get a chance to participate. I'm mad, I'm upset, I'm going to sue. Then you also have federal courts that are kind of involved. So a while back when we were talking about where to go to apply, if you applied, you would have gotten an email from the Department of Education stating that, you know, they did receive your application, but they can't actually do anything with it right now. And when they can, they'll let you know. Also, if you have student loans and you are dreading the fact that you are going to have to start repaying them in January, well, the Biden administration gave you another extension. So the payments for those aren't going to be until the summer. So luckily, you know, you have that. Um, so to continue moving forward with the news, this is NFP week. So we get JOLTS jobs. We got the preliminary job change that comes out on Wednesdays before NFP. Tomorrow, we don't really have too much news. So we do have core PCE. We have unemployment claims, which we get every Thursday, and we have ISM manufacturing. So those are always things that we look at. However, one of the things that sticks out to me about what the Fed says and what they really care about is the fact that um, the labor market has to be slowed down. So whenever the Fed first brought all of this up about interest rates, what the plan and goal was for the economy, how they saw the economy, they always talked about needing to raise unemployment. And they only said it like that maybe 4 or 5 times before then they started switching up the language, because I guess the media finally caught on to the blatant plain English that the Fed was speaking and started making a big deal about how now the Fed wants people out of jobs. So they've changed up the language, but it still means the same thing. JOLTS jobs and the numbers that come out from ADP are important, but the biggest thing that people going to be paying attention to, and the biggest market mover is going to be NFP. If you don't believe that NFP is the biggest market mover as far as news is concerned that there is in currency markets, you can go back and pull up any first Friday of the month when it's a full week. This is kind of an abnormal week, but go through, pull it up, and look at NFP and see how much the market moves. So out of all the news that comes out in the currency markets, NFP tends to move the market about 5 times more than any other news item. And it gets about 80% of the volume of news. Whenever you do the comparison between news items, 80% volume wise goes into NFP. So it's a lot. NFP says a lot about your economy. It says a lot about how your economy is functioning, how it's working, how it will work, because NFP is telling you about how much money people are going to be making, whether it's less, the same, or more when it comes to average hourly earnings. It's showing you your unemployment rate, how many people are actually like not participating in the job market, how many new people are not participating in the job market. And then it's showing you your job changes. So how many jobs have either been created or taken away from the market. Jobs, as we know, when you start looking at the cycle and the wheel of the economy, people need to work to make money, to be able to spend, for corporations to have the money to then turn around and hire people and pay benefits for those people to work, to be able to earn money, to spend, and you know the rest of the cycle. So all of these news items tie in together. Sometimes it might not seem like it, but they definitely do. We will hopefully kind of delve into crypto a little bit on Monday, talk about the state of the crypto markets, and answer some questions that you guys might have, either if you were involved with the platform or if you know of someone who was involved with the platform. Just kind of like figuring out how much exposure, or if, I should say it like that, if the company or platform had any exposure to FTX or any of the other companies. So also with that being said, really quick, if you had, this has been a conversation we had like a long time ago, but if you have money in BlockFi is a platform that has been really transparent since their inception. But they are currently going through bankruptcy proceedings because of FTX. It's one of the platforms that actually offered like a high interest rate for crypto accounts. So at one point in time, they were offering like 9% interest for crypto accounts. So it was one of those. But they were actually able to pay the money, believe it or not. But it was just how they tried to make money on the leveraging side. It's almost like when people compare this to 2008, it really has more. It's like 2008 and Enron, kind of like if the two had a baby. This would kind of be that situation, because 2008 was a time where you had new financial instruments that were being it had been put out there, implemented, deployed, and people were like all about it. Didn't really understand it, but they just did it because it made a lot of money. It was risky, had great returns, but then on the other side was just this void that was slowly growing and couldn't be filled in time for the damage to be stopped. So back to BlockFi, they have a court date coming up in January. I think they might have one in December, but I know they have one in January because they're trying to petition the courts to allow them to allow customers to withdraw their money. That's one of the first times that a platform has actually tried to petition the courts to allow people to be able to withdraw their money. Typically, what platforms will do is they will say, you know what, we owe our stakeholders, we owe debts, we need to pay all this off first. And once we do that, whatever is left, then we'll just divvy it back out to those customers on our platform. But they're trying to do the right thing. Hopefully the courts allow them to do the right thing, and we'll just see. So that's what I have for you guys tonight. But if you have questions, because I know it's been a minute, if you have questions about anything, um, put them here and I can talk about them. Um, and we can kind of go over that. Sorry, my brain is a little fried. Mr. Levels knows I woke up Wednesday. Oh wait, hold up. Today is Wednesday. See, I woke up Monday morning at 6:45 and I didn't go to sleep until yesterday morning at like 11. Anyway, I'm trying, you guys. I try to make it as informative as possible and try to stay on topic and try to make it worth it for you guys. But if you have questions or anything, just let me know and I'll answer them. And I have to go through Telegram because I haven't been on Telegram in a minute. And if you have questions, just at me. So then it'll pop up and I can just tap it and scroll to whatever it is that you have a question about. But anyway, I'm gonna go ahead and turn it over to Mr. Levels and I'll answer any questions that you guys might have at the end.
Cool beans, cool beans. Thank you for that sauce as always, and it's awesome to have you back. Let's jump into these technicals. Cool beans. So looking at the dollar, I told you guys Monday that I wanted to see the dollar reach up into this fair value gap to start the week out with. And then we would need to break this fair value gap and retest it on the opposite side, going to the upside to retest this fair value gap, right? And I told you guys if we did not break above here, get above this fair value gap, that we would more than likely see the dollar come back down to retest this market structure here. Um and possibly fill in the rest of the imbalance to the downside. So we seen Monday that we got up in there. Um Monday. Mm, Go down to the hour right quick so we can see when we got over. So yeah, Monday we came up into the fair value, got money, and then sold back out, sold back down. And then we kind of just ping pong back um and forth until today. We got this push up right after London opening. Um, what time was that? Yeah, I was on a ferry this morning during the market, so I was not in the markets today, guys. Yeah, that was 10 o'clock this morning. Um, yeah, Joe's job. That's that move right there. That's that news came out at 10. That manipulation. Then we see price fall off right after that news come out. Um, so let me look at this on the daily one more time. Yeah, so we'll probably see this market structure be retested, closing out the week Thursday and Friday. But we do have high impact news, so we could see the dollar come on back down and fill in all this imbalance right here. So we'll see what news gives us tomorrow. Um, Looking at currencies, yeah, we same thing. We know we was expecting to see um this imbalance retested first. We got it. But we did not see this imbalance retest. I'm sorry, this fair value gap retested here to the downside because of that news that we had today. So we did see um when we seen that bearish momentum out of the dollar, we seen that bullish momentum come into euro USD. Um and I'm looking at this imbalance that we got here. It's a fair value gap there if you pay attention right there. So yeah, we could see let me just put something right there. Okay, yeah, and I don't need you no more. Really don't need you either. I'm good. Let's see. Yeah. Yeah. Mm-hmm. It's the daily too, so let me see some. Yeah. So see if we get this 1.06 retested to close out the week for euro. Was that's about 200 something more pips, so we can see that. Hold on, let me go back right quick. Now, keep your eye on this previous high right here that we made today when we came up and took out this buy side liquidity there. Because if we don't get above this high by the time that news come out, and if we see price action starting to trickle, making its way back bearish, then that news tomorrow and Friday could be what we need to get back down in here. So we just have to pay attention to price action. Um, GBP USD, same thing. Let me see what we got up here. Oh yeah, imbalance here. I like that. I like that. Let me see what them pips look like. Oh, that's like 400 some pips GBP USD. So let's see. Let me see what it is down here to this. Now, 400 it'll almost 500 if we fill it in. So that could be a good play for you currency traders. Um, NZD don't look like it's giving up much. 100 pip. Yeah, you definitely can't complain about that. What we got down here? Uh-huh. See what you looking at. 200 to the downside if we go to the for the fair value gap to the downside, almost 300. So keep your eyes on your currency pairs if you trading currencies out there and pay attention to price action. Silver, um, silver gave us a good bullish move today with that news. Um, let's see what what will price action give us throughout the rest of Asian markets tonight. Um, yeah, I like this. This fair value gap right here is just too pretty. It's a daily fair value gap too, so I'm gonna need to see some. Definitely need to see. Let's see that, bro. So we might be pushing to the downside for silver. Stand that on out. There we go. All right. So we can't break it. Y'all know what time it is. We'll take it. Um, mhm. Yeah, we got down up in here good one more time. Then we definitely pushing on up, taking out 1800. Let me see what we got to the upside. Mm-hmm. Mm-hmm. Yeah, we don't. Let me see. Go pushing. Yeah, we might be. When was this? Oh, that was back in March. We got up to 2000, wasn't it? And then in August of 2020, we got up to 2000, and then March of this year we got back up there. Let me see something. Oh yeah. Mm-hmm. Mm-hmm. Yeah, we gonna see. We get above 1800 and hold, and we hold 1800. Yeah, we shooting. We should shoot up to fit. Take this fair value gap right here. Um, and then let me see. Oh yeah, man, that ain't nothing but money. Yeah, money. Yeah, we'll see it. We gotta get back above here though. There's a lot of resistance right here. Yeah, and it's right here at 1800. So we need to break that. We break that. We need to see something like that, and it start playing around, doing all that crazy kind of stuff. Then we'll get on up there. But yeah, we need a break here. Really? Let me see. Yeah, 18 to do. That's a big enough round number, 1800. We hold 1800, then we should definitely, we'll probably take them highs. Yeah, 'cause they about even. And you know, it's a whole bunch of stop losses up there, whole bunch of buy stops too. So, um, probably take it and then see a quick reaction. How them buy stops gonna get triggered. So we'll probably see after we take these highs, then we'll probably see a quick sell off um to get them buy stops up out of there. Um and then we'll probably, let me see. Uh-huh. Come back down and take out these lows before continuing to the upside. There's a lot of sell side liquidity right there. We're gonna keep our eyes on that right there. How about that? Yep. And I don't really need. I don't need. Okay. All right. Let's see some. All right. That'll do. Oh, yeah. All right. Okay. just in case. Uh, yeah. Okay. Yeah. All right. Keep your eyes on gold. We should hit 1800, and then we just need to see us break above and hold 1800. If we don't, then we'll come back down. We should come back down, take out this sell side liquidity, and probably fill in all of this. And then we'll have to see how price reacts to that level. Um, Oil. Yeah. All right. Let's see. Y'all already know what it is with oil. Want to get above here. Want to get to like $96. Get above this market structure, and then we can start looking for some long positions. Um, U30. Um, go down to the hour. What the hell push you 30 up like that at 1 o'clock today? Oh, Jerome me wrong was talking, running his mouth. Okay. Well, yeah, he did something. He was talking about something. Um, damn. Let's see something. Mm, London range. Mm, yeah. Yeah, today was ugly. Let's see. Oh, this London right here. Okay. We sold down off of London range to yesterday's London range. Didn't break below it. Didn't break below it though. There go Keisha setup. There go Keisha setup. Yesterday's London range. And then break below it. Popped up. Filled in. Liquidity void right there where that gap's at. And kept going. That was beautiful. Um, yeah. And looking at well, let me see something. Look at this on the data. Take this off. What the hell is this? What we got right here? Should already be. Man, come on. Man. What's this? Yeah. Okay. Yeah, I don't like it. Mm, I guess so. Let's see. You probably ain't know. Let's see. Yeah, a lot going on up in here. We'll see. Yeah, this news gonna be crazy. All right, I'm gonna call that round number 30, 36,400. Let's see if futures reach Dow futures reach for 36,400. A little bit. We just gonna go for the round. How about that? Yeah. 35. I ain't got the market. 35, 420. I like 420. I like 420. So yeah, we're gonna target this buy side liquidity right here. Um, yeah, see what's that. What we talking about? Like 800 points. Like 7,800 pips. So yeah, cool beans. That's what I want to see closing the week for futures. Looking at crypto. What, let me see what Biddy looking like. Oh yeah, I told y'all guys I want to see this buy side liquidity taken out and us get above this market structure. We there. We are definitely there. Let's see. Yes, sir. We seen that taken out. What was that today? Yesterday. And we back above it too. Yeah. Let's reach. Mm, I want to see it retest this structure one more time. Really, this structure here inside of my structure that I already had. Yeah, I want to see us retest it. We retest that and hold that, we good. We yeah, yes, sir. So let's see. Yeah, I like the way that look. Yeah, video pump. Ethereum, same thing. We see a little pull back down to retest the structure and then pop up. Um, what they get up to? About 450. Let me see. High $4.46. Yeah. Yeah, then that little thing. Okay. Let's see if eight pull back down about 340. 335 somewhere up in there. We really want to see this right here. Y'all know what we looking at. Let's see this retested. And let me go put them on that. Mm, let me see. Yeah, I can work with that. Mm, um, mm, yeah, let me see. No, I'm gonna leave that right there. Take it back to the daily. Mm, yeah, take that off. Well, around 330. See if we can buy the dip around 330. As long as we hold it, yeah, we should pop back up above here. Um, yeah. So we'll wait to see us pull back down to like 330. dollar cost average in and wait for us to keep pumping. That's what I got for midweek technicals, everybody. So yeah, at this time I'll start the recording.